Good morning, everybody. It is the day after Election Day, Wednesday, November 7th, and President Obama is getting another 4 years. I think it's interesting that a lot of places you're reading online this morning saying it's nice to know that we have a president this morning, but I'm pretty sure that we had one yesterday morning too, so I'm not really sure where those comments are coming from. But anyway, now we're going to get to, I guess we're going to say, get back to normal, for lack of a better way of putting it, where we will be focusing on what's actually going on in individual companies and in the market in general and how it's reacting. Didn't take long for people to start talking about the fiscal cliff again. Very, very interesting that within 12 hours the futures were down right after the election, had a pretty nice run to the upside where they tested yesterday's high almost to within 10 cents, and now we're actually coming in pretty hard. So what I'm actually going to do right now is pull in the pre-market levels of the spiders. I know we normally don't do this, but I just want to throw it out there to give everybody an idea of the price action from yesterday. So these are the levels that I usually mark off and use as reference points when the market opens, and you can see how wide price action we had yesterday. This is what it looked like when I went to bed last night. Pretty much sold off a little bit right after everything got announced, and then actually tested the pre-market highs, and now we're coming in pretty hard right now. So the point that I'm trying to make here is, if we're setting you up with the morning call to set up game plan ideas for the morning, it's very important to know your levels. And right now, yesterday's high and low are very, very significant levels. We went from testing yesterday's high, failing, and now we're actually at or near yesterday's low. So yesterday's low and today's pre-market low are going to end up being very, very close to the same number. So what's fantastic about that from a trading perspective is that you need reference points to say price is moving closer to or further away from that level, and yesterday's low is going to give us a very quick reference point out of the gate, assuming the numbers open up close to where they are right now. Very quick reference point out of the gate to tell us if buyers or sellers are going to be in charge. And what that translates into is you should be able to be aggressive if those reference points are obvious. Now, one other thing that I want to throw in here just real quick is the VIX. And it's interesting because when the VIX trends, the market is usually tradable, for lack of a better way of putting it. As the VIX rallies, you will have an increase in volatility, which basically means that the average intraday ranges will be expanding. But you can see the VIX itself has actually been kind of consolidating. But the point I'm making is, prior to the consolidation of the last week with the election coming up here, the VIX was actually rallying, so a little bit of fear was coming into the market. We consolidated. You can see here on the daily VIX, the 8 still very comfortably above the 21, which is implying a short-term uptrend. So if that reasserts itself, we will start to see, most likely, a move to the downside and increase in average true range intraday. Now, the reason I'm bringing that up as well, even if you don't watch the VIX on a regular basis, you should make it a part, in my opinion, of your game planning to determine proper share size per trade. And here's what I mean by that. As the VIX increases and moves higher, and especially as it gets up to the $18 to $20 level and above, that means that intraday stocks are moving wider ranges, which means that you need to most likely increase the width of your stop loss to compensate for those wider ranges, which, if you have to increase it because the stocks are moving more, that means to risk the same dollar amount per trade, you will need to decrease the share size for wider stop losses but the same dollar amount. Okay, so make sure you're paying attention to the VIX to help you regulate the amount of shares that you have. So getting right back into the market, the spiders are still pretty clearly not trending, but again, that's the whole point. But the single biggest thing that I'm paying attention to right now is we pushed down, we gapped, we stayed here for about a week, got out, came back in, got out, came back. There's really no clarity here. What I need to see, period, what I want to see is, again, sticking with the reference points, is we have right around here is where we're trading right now, just above the previous, just above yesterday's low. and then we have the 50 EMA and the 21 EMA on the daily. So here's what setting up a trade or setting up an expectation for follow-through, or what the circumstances would look like for you to increase or decrease your aggressiveness, for lack of a better way of putting it. That could be more share size, hold longer, or more positions. Any one of, if not all three of those things. If these things happen, I need to see the spiders either hold below 142 and then see intraday continuation patterns for me to be aggressive on the short side for a continuation of a high, a lower high, a lower high, and the possibility of another lower high. Or if we get above these key moving averages here, 142.77 and right around 143, and we see intraday continuation patterns to the upside, then that means that this might have been a basing pattern where we end up having a move to the upside and testing what ultimately is this trend line, which would take us probably, by the time that happens, up into 145.50 area as a target, if that happens. So we have two very, very clean scenarios. Now, one day last week we actually went over how you add to that equation. You add the VIX, you add the ticks, you add the trend, and then you add the sector and industry rotation into that to give you an increased likelihood for follow-through. So that being said, we covered the SPYs. Let's go to the Qs. Again, the big thing with the Qs, everybody's talking about, Qs are 3 Qs. The moving averages in the Qs and where they are. I actually don't have the 200 on here. But it is right below this level. So getting into setting up some trades on the long side and the short side. Industrial goods for the last month has been the strongest of the individual sectors that we're looking at. So we're going to pull up some stocks that might be off the grid a little bit that we talk about, but we'll get to the normal stocks. But I just wanted to give plenty of other opportunities on both sides of the market. You can see here at CMI we had a very, very clean ascending wedge breakout here, and that's normally where the wedge breaks out from on an ascending wedge. Descending wedge would be the opposite side. Good reward potential here, at least $2, if not $4, depending on where it opens. It has traveled $8 in just a couple of days out of the wedge, so I think a lower opening to bid is a better opportunity. And the way the market's trading right now, you're probably going to get a lower opening. A higher opening will probably take into the 104, 104.50 level, so that reward potential is not as good. So I'd like CMI, but on a lower opening, not a higher one. To follow up, same sector, we have Joy, nice pullback. Finding some resistance at the 200, but you can see that there's plenty of room to the upside if it holds yesterday's lowest support on that lower close. Next we have DE, holding comfortably. And again, one thing I talk about often is the moving averages are in the right order, and in this particular case here, 8's above the 21, 21's above the 50, 50's above the 200. So DE still performing well. The only thing that I don't like here is this big double top. We've got up to this level twice and pushed back. So there's two trades here. If it opens lower, you could be looking to bid into this 84.50 level, or maybe even higher if it bases a little bit higher than that. But this is the resistance level up here that I'd be looking to book profits into around the 87.50 level. I wouldn't add to that until it pushes through that level. I mean, it is what it is. All right, so twice it's tried to get up there. So DE I do like on the long side too, with a very identifiable target. Next we have Honeywell, nice breakout yesterday. You can see a nice slow grinding uptrend. If we go out to the monthly charts, look at how significant this level is right now in Honeywell. I mean, there's no better chart, in my opinion, that you can get where the stock's breaking out to new 5-year highs. That's a pretty good setup. All right, so when you take all that into consideration, pretty decent volume on the push through yesterday as well. As long as it stays above 63, you get a pretty good idea of where those significant levels are. Moving over to a little different sector, conglomerates. All right, some of these stocks are not in uptrends, but I put them into the list because they're clearly basing and having a good push to the upside over the last 15 to 20 days. So we're going to start out with Caterpillar. Next, move over to DOW. You can see that's clearly above the 200 now. And again, these are sideways. I'm just giving you stuff to work on your game plan if they get out and stay above here. Next, we have 3M. 3M is actually about to fill the gap, so that's an interesting one there. And last but not least, we have United Technologies. And again, you can see that they've all had a good run over the last 15 to 20 days, pushing higher while the market's been kind of consolidating to chopping sideways. So a little bit of relative strength there. Getting back to the stocks that we've been spending a lot of time on, Citigroup, obviously strong, was up close to, it was over 3% yesterday. STT, Very clean move to the upside again, and really again, it's imperative that you look and notice what are some significant levels. This week it broke out of this really nice level at 45 on the weekly chart. It's actually coming up to this 200 EMA. Now this is what's actually very interesting too. If you do your chart work, I don't care if you're day trading or holding a stock for an hour, you still need to know your levels. Look at this resistance that's coming up here overhead. So this is not a good stock to be purchasing into this massive resistance going back for the last 2 years. So higher opening in STT, if you're longer from this 42 level, is probably a spot to be looking to book some profits. So again, strong, but coming up into some significant resistance. BK is another one. Nice breakout here, but again, let's make sure we go out to the higher time frames. This one has a little bit more room to go. It's got about 26 and then looks like 28. So if it opens higher, 26 is not a good buy because you got the resistance there. But if it opens lower, 26 would be your first target, and then you can see here clearly 28 after that. Next we have obviously Goldman finally punched its way through that resistance level yesterday. It's going to be interesting. It's opening lower this morning. A lower opening looking to retest that level is in the cards this morning. Aflac, interestingly, came up on some of the work that I did last night. Very, very nice trend. And you can see here on the weekly, it cleared that $50 level, and the next significant level is about $57.50. So you got some nice room in Aflac if it stays above this level. Let's see what else. And last but not least, Bank of America sniffing $10. This is really interesting. Finally was able to work its way through this $9.50 level. It's been harbinging around the last couple of months, and now we are very, very close to the $10 level. As far as on the other side, wouldn't be doing my job. Finally gave you longs. I know majority of the crowd is on the long side, but that's okay. Some aren't. We worked our way over to ESRX. Again, if you're not an earnings news type player, you have yesterday's range now to trade around, so you got significant reference points to trade that as technical. Abbott Labs, ABT, really nice breakdown. If it can stay below this 64, you can see the 200 EMA is $3 below, $2 below that, so you got some room at 62.95, so room to go and a downtrend. After that, we have ARIA, ARIA, flagging, pausing, consolidating, whatever you want to call it, below the 50 EMA and the other two moving averages, and look at how far below the 200 is. Looks like the real support there. You got some at 21 and then at 19, so you have some room to go, especially if you can clear that 21. Getting back to the tech side, those are the stocks that we've really been focusing on the downside lately, as far as being relatively weak. You can see NTAP here in a pretty nice downtrend, and just broke the 2012 support this week. So we got to stay below the 28. Don't short her into support. Let it make sure it stays below that level before you get involved. The SanDisk is actually down quite a bit this morning. Trading. Let's actually see where it is trading exactly. I don't have it. Yeah, it's all the way down here. All right, so SanDisk is actually trading lower this morning by a pretty decent amount. Next we have Citrix, CTXS. Nice flag and consolidation down there as well. And last but not least, Broadcom. All right, so Broadcom, nice little flag, descending wedge down here as well. If we move this out of the way, you can see here the next significant level is almost $2 away, so you got some room to go there. So it looks like some biotech stocks are shortable as well as tech. Financials still strong. Industrial goods, conglomerates are on the strong side. So Time Warner and Macy's reporting this morning. And I think we got some good trades on both sides of the market. Have a great day today.
I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.